Welcome to our channel. If you want to create a tax strategy that adapts as your business expands, follow these step-by-step instructions to build a flexible, growth-oriented tax plan. Step 1. Assess your current business structure. Sole proprietorships, partnerships, LLCs, S Corp, and C Corp have different tax implications that affect growth strategies. Step 2. Work with a tax professional to project your business growth over the next 3 to 5 years, estimating revenue increases and potential expansions. Step 3. Establish a retirement plan such as a SEP IRA, Simple IRA, or 401k to reduce taxable income while building long-term wealth. Step 4. Implement quarterly tax planning reviews to adjust estimated tax payments and identify new deduction opportunities as your business evolves. Step 5. Keep detailed records of all business expenses, assets, and investments. Use accounting software to track everything in real time for better tax planning. Step 6. Consider restructuring your business entity as you grow. An LLC might benefit from S Corp election when profits increase significantly. Step 7. Plan for major purchases and investments strategically, timing them to maximize depreciation deductions through Section 179 or bonus depreciation. Step 8. Build a relationship with a qualified CPA who understands your industry and can provide proactive tax strategies that support business growth and minimize tax liability year after year. Don't forget to like this video and subscribe to our channel.